All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live session. I'm your host, Ryan Carthage. Hope everybody is doing well today, this fine Wednesday. So, apologize for the delay. I had some technical difficulties, but without further ado, please turn off all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. All right. So, dive into some fundamental things. Take a quick look at trading economics. We'll take a look at the calendar. I want to take a look at this article that I came across after the session last night, early this morning, on the yen. So we'll take a look at that. We'll talk through it a bit, and then we will dive into the charts to see where things are, to see what transpired overnight. Got some fresh updates that I still need to do on some pounds and the New Zealand's. So we'll dive through the charts, and then if you guys have any pairs that you want me to take a look at, we can do that as well. All right, so let's turn off our distractions. I said that already. So let's hop over to trading economics and see what we have shaken. Real quick, just drop me one in the chat if you can hear me okay, and if you can see my screen. All right, perfect. Thank you, Michelle. All right, cool deal. So let's slide over. All right, so one more second here. There we go. All right, so German consumer morale unexpectedly declines. Germany's GfK consumer climate indicator dropped to negative 25.4. Hello?
Look, Ryan, usually when you're reading, you show the picture of what you're reading.
You're not able to see my screen. Got it. Okay. Thank you. Let me see what's happening here. Thanks for the heads up there. I thought it switched over. Let's see. Let's try this again. Give me 1 second. It's not allowing me to share this for some reason. Let's see. Let's try it a different way. Can you see my screen now?
Perfect.
All right, cool. That's weird. But German consumer morale unexpectedly declines. Dropped to 25.4 heading into July compared to a slightly revised 24.4 the previous month, and falling short of market expectations of negative 23. It marked the first deterioration in consumer morale in 9 months, primarily driven by a decline in economic and income expectations, right? So fear is starting to pick up in some of the areas in the Eurozone, all right? Eurozone lending growth slows further in May. Italian inflation rate falls to a 14-month low. Right, so starting to get some mixed data and some mixed feelings coming out of the Eurozone. All right, so something for us to pay attention to in the background. Right, Christine Lagarde is still hawkish. Right, still still going to be pressing forward with interest rate hikes, but there's some concerns starting to creep in. Okay, so we'll continue to watch that, right? And then CPI data out of Australia, monthly consumer price index indicator in Australia advanced 5.6% in the year to May 2023, slowing from 6.8% rise in the year April to 2023, and below market consensus of 6.1, right? Slowing down a little bit. It was the lowest annual inflation rate since April 2022, due mainly to softer pace in the growth of both housing and transport prices. Costs slowed for transportation, with automotive fuel prices falling 8%. Housing, namely new dwellings, which was the lowest annual growth since November 2021. Recreation and culture, 3.5% versus 6.4%. See the drop there. Mostly holiday travel and accommodations. Meanwhile, food and non-alcoholic beverages inflation was steady. The monthly CPI indicator, excluding volatile fruit, vegetables, and fuel, was down to 6.4 in May from 6.5 in April. Inflation remains well above the target for the Reserve Bank of Australia. However, it's starting to come down. So, yes, the RBA could continue to increase rates, which they stated that they likely will because inflation is still high, but starting to get back and forth again in some of the data that they'll be looking at. Okay. Those are the articles from Trading Economics. Over to the calendar really quickly. There's that CPI number there for Australia. And let me refresh this. So today, right, here's that consumer climate number. We have central bank speakers speaking starting at 9:30, right? So that's going to be what most folks have their eyes on, listening to what they have to say, how they view the future when it comes to inflation, interest rates, and all things monetary policy. Okay. We got crude oil inventories at 10:30. And that's pretty much the day, right? Pretty much the day. So that's what we'll keep our eyes on, is the words that they choose coming out of this this summit in Europe. Okay. So that's the calendar. So now quickly, we won't spend a ton of time here, but here's an article that I came across. I'll drop it into the chat for us. But talking about the yen and ultimately how the fear isn't the same as it was last year when prices started to get high. Yeah, they've mentioned potential intervention, but so this article, they talk through. I'll read the first couple of paragraphs. Policymakers and business leaders appear far more sanguine about the recent slide in the yen than they were last year, about last year's intervention triggering collapse. Sign that they see weakness as temporary. While the currency is at an almost 8-month low against the dollar and at its weakest against the euro in 15 years, the panic of 2020 doesn't appear to be coursing through the veins of officials, consumers, and company execs yet. Last year, Japan spent $65 billion on direct purchases of the yen to help drag it off a 3-decade low versus the greenback. One key factor is the perception central banks are near the end of the global rate hike cycle than the beginning. While it's not clear when those like the U.S. Federal Reserve will reach the stop. That view has helped dampen fears that Japan is peering into an abyss of the yen free fall. An extended period of modest currency weakness could counterintuitively lay the ground for a long-run yen strength should it help the Bank of Japan boost growth, attain its inflation goal, and finally embark on pivot from past decades super easy monetary policy, right? So they're looking at this a little bit differently. And they're looking at it as an opportunity to take advantage of. The bottom line boost to exports from the soft yen and renewed optimism over the economy have already helped the stock market chalk up 33-year highs, right? So pressure on the yen won't escalate much from here. The Fed is approaching its terminal rate with probably one more hike, at most two. Chief economists at the Research Institute. The yen doesn't have the same falling momentum that it did last year, right? So they're talking about how fast.
No problem. Okay. No, I was just sitting down here pinning the sleeves.
They're talking about how fast the currency was moving, right? So they're looking at it a little bit differently, and they're not concerned yet. Now, this article talks about some other thing, gives backdrop, but it does say, but while the yen at 144 per dollar now seems a lot less scary than it did last year, a further fall toward the 150 would still likely jolt Japan out of its new comfort zone and on the road for fresh action. So they could then, as we get close to 150, potentially intervene if we get there, right? So if we get to the yens today, we'll look at where they are. We'll take a look at the dollar yen at least, and get an understanding of where that 150 range falls in the Fibonacci sequence and in the sequence of the 80-20. So take a look at that article, read through it. It's an interesting perspective, but it gives us some kind of new levels to take a look at when it comes to the fundamental side of things and what the Bank of Japan is looking at. And it could give us some points of reference as we move through the coming weeks. All right. So any questions from a fundamental perspective? And does this kind of give you a framework for the yen?
Good morning.
Good morning.
This is Marshall. Quick question.
Marshall? Yes, sir.
Regarding Christine Lagarde and ECB being hawkish. So does that mean that she's not optimistic about the growth for the euro?
No,
I want to make sure.
Her concern is inflation. Her concern is sheerly inflation. Inflation is too high. Yesterday, as she spoke, she said that inflation is set to be too high for too long. So they have to continue to press into increasing interest rates to bring inflation down. So it's not about the economy at all, but inflation is just too high, and it's set to be that way for quite some time. And that's concern. That part is her primary focus and primary concern. And so she's going to, if they're going to continue to increase those interest rates, then that euro could continue to increase in value. Make sense?
Yes. Thank you.
You're welcome. All right. So this dollar yen, we'll start here, and then we'll take a look at some pounds and such. So I'm gonna come back to let me get a point of reference real quick. All right. So I'm just gonna circle this level here, and we can come back to that. All right. So coming back to the daily, maybe. There we go. Coming back to the daily here, right? I'm going to run this fib off the low. Boom. Okay. I just want to double check something here. There we go. Yep. Okay. Cool. So this is where we are in the Fibonacci sequence. All right. We on the daily time frame, we hit the D extension, broke this last daily level. Now the article mentioned 150. So 150, we've got a ways to go here. Right. And so what they're looking at is as long as things don't accelerate too fast, they won't intervene. And also, as long as things don't get to this level, which if we come back and look at it, right, not an all-time high, but it hasn't been that high in quite some time, right? If we come back to the monthly here, right, that 150 level hasn't been seen. Whoops. The last time was here in September, right, when we hit that level, but it hadn't been seen ever since then, right? So as long as we don't approach these all-time highs, we're good, is what the Bank of Japan is saying, right? So as we're pressing to the upside here, check this out. This is a monthly fib here, right? That's our AB boundary. We got a 382. Pressing back to the upside, this was part of that intervention, right, last year, and then we turned over. Okay, so long bearish breakout to the downside, and now we're coming back to retest some of those levels, right? So this zone here is where we currently sit, and ultimately what the Bank of Japan is going to be watching, right? 148 is a daily resistance level. Once we get down to the daily time frame, we'll see that 150 is just below the 151 all-time high, right? So we're pressing back up into this zone, taking back some of what the market gave us, right? So from a monthly time frame perspective, we see a breakout, we see a pullback in the retest of that zone. If you look at it sheerly from a technical perspective, right? So the words then kind of make sense when we're looking at this zone as potential interest for the Bank of Japan, right? From a fundamental perspective. So as we continue to move down to the weekly, right, we see that breakout a little bit closer here. Okay. And we hit the D extension on our weekly fib, right? This would be our AB boundary here, right? And we're pressing back to the upside. Okay, so it's gonna ultimately we could end up in a bit of a range here, but pressing back to the upside, potentially getting back to this at 148.857 level, right? So that's where you're on the weekly. Coming to the daily, this is where you see that daily resistance come in here, right? So as we're looking at price ride to the upside, potentially what we could be in for if we don't get a pullback now, right? We could hit this level at 148.892 and either see the Bank of Japan start to increase their intervention talks, or, right, this could be the level for things to reverse and push back down to the downside. Okay, understanding that this is our area of interest from a monthly time frame perspective, right? And we got smaller previous support zones here, right, that we're also approaching, right? This was a previous, I'll pull this out, right? Previous support here, right? And we also see bearish engulfing candle there, right? That were also approaching 145.084. Okay, so now technically, taking the technicals into account with the fundamentals, we're now seeing that we got some key levels also in the zone that the Bank of Japan has their eyes on. Okay, so this gives us a little bit more detail to the story that we want to pay attention to. So I'll shrink this zone here, seeing as we have previous support here that we could also be coming back to retest, right? Which would lend to another potential push to the upside into this zone first before we get a retracement. And last night we talked about this with the euro yen, right? A potential another push to the upside before we see some action and potentially a move back down to the downside. But we have key levels in a lot of these yen crosses now coming into play that we could start to see reactions at. All right, so this is the dollar yen on the daily. So now coming down to the 4, clean this up. Now coming down to the 4, make sure. Just want to make sure that level is accurate for me. Yep. Okay. So on our 4-hour, here's our fib, right? And Benny's been talking about the global economic approach, right? Looking at things from a holistic perspective. So now on the 4, we see this previous support level is at the D extension on this 4-hour. So we could likely not see the retracement in this 80-20, right? We could see price push to the D extension and get to this previous support level, which then potentially could serve as resistance as price moves through this cycle and as the Bank of Japan continues to sit and allow things to move, ultimately playing into kind of play into their hands a bit, right? And allow for things to be cheaper, allow for them to continue to build their economy and build their base so that they can potentially shift their policy stance sometime in the future. Okay, so that's the 4-hour. So this 80-20 scenario could not play out, right? We talked about last night ensuring that we get all the confirmations, right, before we enter on these yens. And now this gives us an idea and an understanding of why we need to just sit and be patient a bit, right? Because we could see price rise higher, 145, potentially higher 140s. We could see it continue to run, right? Especially as coming into next month, another rate cycle could see the U.S. push a little bit higher after the pause. And so we could see it run a bit, right? So then coming down to the 1-hour, right? Come back here and run the fib on the 1. Boom. So on our 1-hour, that 145 level, right? Previous support, the extension on the 4-hour is still within the 118, 127 zone, right? Not at the D extension on the 1-hour fib. So if this does serve as resistance here, right, we could potentially still be in for 80-20 on the 1-hour time frame if we get that reset on the 4, right? So on this dollar yen and on the yen crosses, like I spoke about last night, we're going to look for another push to the upside, right? We could see this continue to trickle higher. So we want to be patient on the yens, as Benny has pressed into, but this gives us an understanding as to why we need to be patient on these yens and look at some of these higher 140 levels and potentially 150 as a point of concern for the Bank of Japan if price gets to that level. All right. Does that make sense? All right. Sweet. Okay. So that's the dollar yen, looking for price to continue to ride higher. Just like the other yen crosses, right? Which you broke down last night. Okay. So that's that. Take a look at the dollar. Here on the 4, right, we're pressing back into this daily resistance level, trying to break through it. So if we get a break and a retest, we could continue to the next level at 12,994, right, and continue pushing to the upside. So that means our dollar pairs and the dollar crosses are running long, which for that dollar yen makes sense. We could see that continue to press higher, right? So we'll watch this level and watch the words of Jerome Powell today to see what he says and how the investors take his words, because they have not taken his words for his words yet, because stock market still continues to press to the upside and still have its rallies. But the question is, do those rallies start to slow down, and do they start to come to an end if his tone doesn't change and if he becomes more stern in his tone regarding interest rate hikes and the need to continue to increase them? All right. So that's the dollar. We'll see if we're able to break through that level and continue pressing higher there. Okay. So I want to go through euros and pounds and see if we get to the New Zealand's as well today. Just like I said yesterday, I've been out a few days, so I want to get everything updated, and we'll talk through them as we do so. So this Euro Aussie, right? We talked about it last night with that Aussie data, pushing this pair in the direction that we anticipated it to go, right? Price didn't break through that level there. This is a weekly time frame, but what we have here, right, this morning star pattern, decision, indecision, decision. When we see that, right, we look for more bullish action, and we're getting it. And we're rising to the upside, right? And this overall 80-20 on the weekly time frame, right? So now next level to watch, 168.272 on a higher time frame. See if we're finally able to break through this level and continue making those moves to the upside. Okay. So that's the weekly. Coming down to the daily, we had that 382 push, beautiful V bottom, and been strong pushing to the upside. Okay. So we're coming into this level of daily, what we've pushed into this level of daily resistance, 165, 189. So now, right, we've had 1, 2, 3, 4, 5, 6, 7, 8 days of bullish movement. The question is going to be, do we get a pullback before we get a continuation? Right? I'm going to kill this previous daily level. Right? Do we get a pullback before we get a continuation? That's the question that I have as I'm looking at this, right? 8 days straight up, right? So do we get a pullback and then get a continuation long? Now, if we get that, what we're in for is this head and shoulders pattern. Actually, crown pattern. All right, barely took out that previous high. We get a pullback here. Boom. For that continuation to the upside, get to that D extension at 169.671. Right? So this is what I'm watching for to see if we get this pullback here, right? And this is our harmonic fib that we can also monitor. Left tip, see if we get our right tip to come back down to that 618 retracement zone, and see if we get a push to the upside here, right? Christine Lagarde's comments today could potentially give a catalyst, right? If they take some of her words to be dovish on the line or what have you, right? We could see something that gives us a retracement. And this could just potentially even just be a level of for buyers to take some profit before we get back long, right? So coming down to the 4, this is what this move looks like, right? So we're in the C to D push off of just missed that 382 level here, right? Pushing to the upside. So we'll watch these levels here, right? We'll watch these levels here as price continues to ride long. Okay, and if we run a sub fib off of the low, this is where we sit in the cycle. Right, we hit the D extension there in line with that daily resistance level. So on our sub fibs, do we get a fresh AB boundary and a reset? All right. So that new fib, once it pops in, once that current candle closes, that'll be the AB boundary. But could we see this come back a little deeper like that? Right. So that's what we're watching for on the 4. See if we get a retracement to come in, give us some movement back to the downside, give us a low price to then get back long on this Euro Aussie. Okay. So now coming down to the 1, this is what this looks like on the 1. All right. These are fibs coming off that low. Right. And we got a fresh AB boundary here as well. Strong push up last night, hit that level. Now we're retesting that level. We stay below it, or even if we push into the 118, 127 zone, it'll still be cool. Still set us up nicely for that crown pattern if we are to get it. Right? So if we get the reversal here, back down to that support level, or if we push into the 118, 127 zone and then get the reversal, right? Still sets us up beautifully for the crown pattern, and then we'll look for the low price to get long. All right. So we'll watch this level here, 165, 189, to see if we're able to stay below it. All right. If we're able to stay below it, then we'll look for some short opportunities and look for some low prices. All right. Would love for a price to take out this daily level and push into this 118, 127 zone, right? Just for my trading plan's sake. But if we get the retracement, that's cool. I'll wait for a low price down at 162 level, right? And look for buying opportunities from there. Ultimately, potentially tracking this weekly 80-20 scenario back to 174 level at some point. All right. You guys follow me on each of those levels on this Euro Aussie? All right.
Yeah.
Questions? Nope. All right. Cool deal. The Euro CAD is finally moving. So we'll come top down, right? So monthly time frame, this is where we are. Right? We got an 8-6 retracement. We stayed inside the A boundary. Nice bearish candle. We're pulling back now potentially to retest some of these levels. Right? So we're pulling back now off that bearish push. So coming to the weekly, this is where we sit. 8-6 retracement off the capital fib there. Right? And I ran a sub fib to the upside just to track this movement and a potential reversal. So we know we got this breakdown here. Boom, strong move. Now, do we come back and retest this 149, 264 level? That's going to be the question, right? We know things are starting to shift in Canada from a economic perspective, starting to slow down as they anticipate. So there's some building anticipation that the Bank of Canada could go back to pausing, seeing as inflation is starting to come down in Canada. Okay, so now we're pressing to the upside in this retracement phase, right? Still haven't got to a 382 off that sub fib. We're looking at a potential down push zone, right? We had our down retracement zone here. We got to our high price. We could be working on, right, after we move through potential consolidation, we could be looking at preparing for a down push zone sometime later in the year, right? And these are weekly candles, so this could take a while. But we could see price come back into the zone here, right? And this is the area that breakout of that bearish candle here, right? So we'll see what happens at 149.264. See if that zone holds. So coming down to the daily, I'll bring this down with us. Boom. Coming down to the daily, right? We also see we haven't gotten to that 382 level yet. We have some daily resistance levels that we'll have to pay attention to as price pushes up, but we see this is that zone that price broke out of. Boom. Now we're looking at price rising again. So the question will be, as we get into these higher levels, 149 ranges, what happens from a fundamental perspective? Do things start to change as we get there, right? But we're getting this push now. Price took its time at this daily support level. One touch, almost came back and gave us a double bottom here. Strong bullish action. We're on the move to the upside now, right? And we've been watching this on the lower time frames, coming to the 4 in this 80-20 here, right? Price took its time. It did its dance. And now we're pressing long. Okay. Now we're finally pressing long. Take this down. Take that out. Right. So now pressing to the upside. Strong bullish push. Right. If you're tracking this with your trend lines. Right. We run that trend line close to the lowest point as possible without cutting off any wicks or bodies. If we have a zone of consolidation, which we had here, right, push back down to the bottom of that range, we shift that trend line to the outermost point, bang, right? So there we are. There's our trend line break, right? And we'll look at another trend line on the lower on the 1 hour, but oops. There we go. Right. So we got our trend line break. Things starting to slow down a bit. So could we get a retracement and then continuation? Right. But what we've been waiting for is this strong push to the upside to get moving, making our way back to this 382 and potentially higher. And here's that zone that we brought off the higher time frame. Right. Here's that zone that we'll keep our eyes on. And if we get there, we're taking out the A on this sub fib down, right? But we're also getting back to, here on the 4 hour, 8.6 retracement on the capital fib, 118 the extension, right? So this zone, we have some confluence as we start moving through the time frames that this zone could also be one, a key one to watch for potential reset, right? So that's where we are. 80-20 on the 4, starting to press to the upside. We'll look to see if we get a pullback and then a continuation. Right? Into that zone. Okay? Again, right, that bullish narrative still in play, but we could get a pullback first. Okay? I'll come into the 1. Don't have an 80-20 on the 1, right? But this is that range in more detail. Okay. Now we're pressing to the upside. Haven't been able to break out of the top of that yet. So again, do we get that pullback and then push to the upside there? All right. And your trend line break on the 1 hour, if you were running trend lines, would have been there. That would have been your trend line there. Boom. Right? So that's what we're looking at. Continuation to the upside. Okay. Just waiting on it. There's your sub fib on the 1. Pushed into that 118 and 127 zone, which could give us some credence for, right, that retracement that I just talked about. So let's see if we get some action like this. Already starting to try to press down. See if we get some action like this. Come back and retest this previous resistance zone here. Right in our sweet spot. Okay. So let's see if we get that retracement. Oops. Retracement. Retest the trend line, 618 retracement zone, previous resistance, and then give us that low price to get back long. Right? But we're moving to the upside. Things are starting to shift in Canada, right? Starting to play into our narrative a bit. Okay. So looking for a retracement there on the sub. Questions on the Euro CAD? No? Nope. All right. Cool deal. And go, man, that fire is crazy. Yesterday was the first day that I actually saw or felt the impact of this wildfires in Canada, and the smoke is coming across to impact us down here in the lower 48. So yesterday was the first day that I actually saw the smog in the air, and I felt it. Right, it's really, really thick. So it's interesting. It's very interesting. Yeah, if they can definitely get those put out sooner than later, not just for us but for everybody involved, that'd be great. But yeah, so let's see if we get some movement here. I had it 2 weeks ago. Yeah. So let's see what happens here. Right, looking for this retracement here back down into the sweet spot. Okay. No questions on the Euro CAD. Let's keep moving the Euro Swissy. All right. If we come top down, monthly, right? We've been in this bit of a range here. Monthly support level here, all-time low as well. And we're just ranging right now, trying to get back bullish. Okay. Coming to the weekly time frame. We already got a 382 push, but we're stalling down here again, all-time lows, right? And we're trying to see if price can turn over and make its way back to the upside. We'll adjust that support level there. We'll take it down in a second. So we got a new level of weekly support there, and we're pushing long, right? Euro bias overall, upside, right? So weekly levels here that we'll have to pay attention to, okay? Once we get there, 99,909, right? But pushing back to the upside here. Coming to the daily, this is where we sit. I'm going to change this level here. This is that weekly support level, so we'll change that blue. This one is no longer. Okay. Excuse me. So overall on the daily, right, we've got just shy of a 50% retracement, right? Been pressing to the downside, right? So overall down, but we got Euro strength. So we're looking for this to push to the upside. Now you have the Swissy, which is a safe haven currency. So if we do have some sort of major event that causes a run to the safe havens, this is one that we could potentially see shift even with us having a bullish euro bias, right? So this one will be interesting based on the risk sentiment in the market. So in the short term, though, we're looking at this to move to the upside. Okay, looking at this move to the upside. We got a daily level of resistance at 98,792 at our next level to watch, right? Next level to watch. So we're pressing to the upside here. Okay. Coming down to our 4, clean this up some. Take that out. Here we are on the 4, right? Pressing deeper into the zone. We got to a 786 retracement level, came back, and now we're pressing back long. Okay. Overall bias to the upside, right? We got a down trend line coming in play at this resistance level at 98,792 that we'll have to watch, right? And this is that weekly level at 99,909, right? And that $1 mark here. Okay. So we'll watch this overall to see what transpires if we're able to break this zone and make it to the next, right? Which means we'll take out the A and we'll flip the fib, right? If price continues to ride to the upside. Okay. So that's where we are. So if we run a sub fib, right, looking at the smaller waves, tracking the move to the upside, right, we had kind of a double bottom scenario here, and we're pressing back long, right? So on this smaller wave, pull this out for a second. All right, if we look at these smaller waves to the upside in the direction of our bias, this wick gave us a 618 retracement, right, which Benny talked about. Push. All right, push to the upside. Boom. We're headed north. The extension is here, 98,520. Right? So coming out of the weekly ritual, this was the move. This was the move. Okay. So we'll watch these higher levels as we get to the extension here on the sub fib 4. If we break that daily level, we know that that's the A boundary of that capital fib, which then makes these waves here are capital waves to the upside. Right? So we'll watch that as price is moving. All right. But we're headed north. Headed north. Next destination 98,792. Coming down to the 1. Right? We see that a little more closely here. Here was your 618 retracement push. Right? That smaller wave on the 4. It's your capital fib on the 1. 618 retracement. Takeoff. And now we're headed back to the upside. All right. So we'll allow this to continue to run, do its thing, and we'll monitor things as they go. Right. But off that 618 retracement, we're up 89 pips on that move. Okay. So looking north here on the Euro Swissy. Questions? No? All right. Cool deal. Our best friend, Euro GBP, it's been working. It's been trying to work. So monthly time frame, we see the range. All right. We see the range. Just been bouncing around. Okay. Trying to get back long, but you also have a strong pound. Right? Also have a strong pound. So we got a monthly resistance level here that we'll put in. It'll be a level on the lower time frames as well, and we'll change it. But there, right? Monthly resistance, push down, trying to stall out a bit and turn back to the upside. Okay, I'll adjust that to support there. Okay. So now as we move through, right, this is monthly level. Boom. Okay. So now as we come to the weekly, we see that in a little more detail. We see that push to the upside here, right? This weekly support level got broken. If we continue bullish, this will be our new weekly support level here, right? We're headed long. Next level, 87,180. If we're able to push back into this previous support level, right? I kept that weekly level in there because I wanted to watch that. Okay. So we'll wait to adjust that support. Now coming down to the daily. Bring this down. Now on the daily, it's still messy, right? Still messy. So if we just track fibs off of the low and then off the high, right? This is where we sit. 786 retracement, almost a double bottom there. Right? And we're trying to push back long. Got some work to do, but trying to get there. So if we zoom in a bit and look at this, we're sitting at a level of daily resistance right now. Right here. So I have to break through that in order to continue to the upside. Okay. But been pressing along for the past few days. Okay. So as we come down to the 4, we get a little bit more clarity here on where things sit. Right. That's that previous weekly level that once this week closes out, this level will become a support level down here. Right. But we have daily support for now that I need to add in here. All right, so right now this is a daily support level. Boom. And we'll bring this down like that. Right, so we pushed down, we created this swing low here. And we got to push off the level. Right, what we were anticipating, we ended up getting. Whoops. All right. So push it to the upside, got a level of daily resistance here. It's a 50% retracement on this 4-hour fib. So we'll see what happens as we continue to push to the upside here. Okay. But a little bit more clarity now as we run those fibs through on the 4. So coming down to our 1, this is where things get really clear for us. Right. Through all the mumbo jumbo, through all the static, shallow retracement, 118, 127 zone. We got to push to the upside, right? So it's even as crazy as this Euro GBP looks, and sometimes it feels, right? We're pressing long, right? But again, Euro bias. Yes, this one was a little different because we got a strong bias on the pound as well, but we're pressing to the upside nonetheless. All right, and we're just shy of the 382 level there on the 1, and we'll see if we get this to continue long. Got some work to do, but out of that zone, we are currently up 73 pips, 70 pips, right? So we'll continue to watch that to the upside there. Okay, that's the Euro GBP pushing long. And we'll allow that one to continue. I do need to adjust my stop loss. However, I'm going to bring that just below that support. Boom. There we go. So that's in profit. If anything changes, won't lose anything. All right. So we're pressing along there. Questions on the Euro GBP?
He gave me $1. I just went ahead and scalped that day.
Look at that. Look at that. Trying to mend that relationship a little bit. Good work. Good work. Good work. All right. So that's the Euro GBP. Dropping down. All right. We broke down the Euro Yen last night. But let's look at it with a little bit of a clearer lens with the sentiment on the yen, right? Coming out of Bank of Japan. So D extension there, just above where we currently are, 158.292. Haven't been at these levels since 2008, right? Could we push a little bit higher and get to 170 or somewhere in this range? We could. We could, right? Could we push into this zone here, right? So similar to the dollar, got a little bit of ways to go until we could see some concern coming out of the Bank of Japan and potential intervention, right? But we've been long, and we plan to continue being long until we see otherwise, right? And the Bank of Japan is okay with that. So coming into a monthly de-extension here, right? And that's that level that we marked out. So let's drop down. I want to bring this down with us as well. Boom. So now on the weekly, right, we hit a de-extension there. Right? Blue line is the weekly de-extension. Black line is the monthly de-extension. So we're pushing into that level now. So we want to see, do we get a retracement first, come back, retest previous resistance, use it as support, and then potentially get long up into that 170 range. Maybe. We'll see, right? We need a reset first, right? We need a reset first. If we get something like that, that'll be just a 382. And then coincidentally, 118, 120, 236 level, retest that previous resistance. If we get a swing high somewhere in this range, right? Monthly resistance level, right? 118, 127 zone on the weekly time frame will be in this zone here, 170, and just shy of that. So we'll see what happens here, right? See if we get a pullback, retest, continuation long into this range. Okay. So we'll wait for that fib to pop in on the weekly. We got a couple weeks yet. Coming down though to the daily, right? This was our original zone that we wanted to watch from a while ago. Let me shrink this a little bit here. Just going to bring that closer to where we are. All right. That's our zone. Boom. Now, what happens here? What happens? So we got a D extension here on the daily as well, in line with that monthly D extension, okay, that we're just shy of. So a potential short-term, another push to the upside. Maybe we get a retracement here. Again, depending on what happens out of the ECB, Christine Lagarde. But do we get a push up into the zone, retracement, and then continuation long like that? All right. Or do we see this just take off and fly to the upside? That's okay too. Right? That's okay too. So that's what we want to watch for here in this range, right? Monthly, weekly, daily D extensions all being hit. Broke down that last night, but it makes sense now with the Bank of Japan's sentiment, right? And we could see it continue to rise, especially if the ECB continues to be hawkish, and the Bank of Japan will be okay with that rise potentially until this 170 level, right? Which again, we haven't seen in a very, very, very long time, 2008, right? So we could see a short-term reset and continuation long before we see a larger reset, right? So keeping that in mind, coming down to the 4. Boom. So on this one, if we do get this short-term retracement to retest this weekly level, right, that may be all we get. So we want to keep that in mind and stay present with that, right? This retracement here to this weekly level, it's still a large move if we get the reset, still 600 pips to that level, right? But we could look for it not to get to this 382 yet, right? And we could see this then turn over and press to the upside, right? 80-20 not completely playing out, but giving us a retracement to then get back long into these higher ranges. Okay. So that's how that makes sense with that Bank of Japan information. So now coming here to the 1, right? That reset will take out the 1 hour fib. I mean, that retracement on the 4 would take out the fib on the 1, right? So that's still the same. And we could see these waves then continue to play out and push to the upside, right? So we'll see if we get a pullback in a nice one, maybe, and come back to 151,584. And then we're going to look for long opportunities unless something drastic changes. Okay. So again, looking for a short-term push to the upside, potential retracement, and then we'll see if we get an opportunity to get back low. Okay, so we'll watch closely here to see what happens if we stay below these levels, come back down. If we break out in a strong fashion to the upside, we could just see it ride. Okay. Questions on the euro yen? Euro NZD. Let's look at it. And we'll wrap things up here at a little over time. Pressing into, we got monthly resistance here at 182. Right? Monthly resistance at 182 has been a strong move to the upside since September. Right? No, since March of last year, April. Boom. Right? Strong move to the upside. Coming into 182, 342. Right? So coming down to the weekly, I had this crown pattern marked out and still technically in place. We'll see what happens. Right? Don't know that we'll get this sharp move to the downside on the euro like that. I don't know that we'll get that yet. But this is at 182 level here that we could push into. Okay. And we could push into. So we'll watch this and see what transpires. That's our weekly resistance level there. Okay. Bring that down. So pushing back into, now we have a weekly resistance level that we're moving into as well at 180. Okay. Coming down to the daily. Boom. Take that level out. Look at it. All right. We got a 382 push, and we've been long ever since. So we'll watch. This is that monthly level, right? The extension is outside of that. So we'll see as things continue to rise, what happens at these higher levels. Weekly level, monthly level. See if we're able to break through those and continue long, right? But off this low, 700 pip move to the upside, right? And we'll see how that all comes into play with where we are in the lower time frames. But coming to the 4, right? Look at it. This was the original move here, right? Beautiful breakdown, 618 retracement, daily support. Boom. Right? This is that double bottom here on the daily. This is that double bottom on the 4, right? So we've been long for quite some time here, since May, right? Moving to the upside, the extension here at 181. Again, got some levels to break through, but that D extension is in line with these monthly and weekly resistance levels in that 182 range that we looked at off the monthly, right? So it's playing out as expected. Playing out as expected. And then if you look at smaller range, right? Smaller waves, you had another opportunity here for entry or add to the trade as price pushed back into the sweet spot on the subfib, right in the zone that we wanted it to, right? Moving to the upside. The cycle continues, right? So again, off that low, 800 pips, right? If you took the entry off the 618, second opportunity, that's 589. And it's still moving. Still got room to go, right? But we could be in for a shorter term retracement. Strong bullish move. Broke resistance. Look for a retracement and continuation. Right? But it's been a beautiful move to the upside since May. Right? Look for it to continue. Coming down to our 1, let's see. Cool. So we'll run the fib off the low on the 1. And there we have it. We didn't get the 382. The euro just wrecking shop to the upside. Bang. Now coming into this weekly resistance is where we could see a swing high form. Actually, we should have that already. A new fib at some point will pop in. Look like this. Boom. Right? So now we'll look at potentially 80-20 scenario, retracement, and then continuation on the 1. So we'll watch that closely here. Okay. See if we get something like this. Okay. That's the Euro NZD. Any questions? Questions on anything that we covered this morning? Didn't get through as much as I anticipated, but I think it was good work. You're welcome. You're welcome.
I know I'm not gonna make the same mistake twice. Well, I'm gonna try not to.
What mistake we talking about?
I call myself like I ain't looking at the chart. This was Friday, and it happens every time. So I ain't gonna look at the charts. I'm gonna let everything run. I had everything in place just in case. And I didn't look at news, look at nothing. Mm-hmm. And then when we logged on for, the Saturday ritual, it's like win or risk on. I was like, what? Because I didn't check the VIXI or nothing. And I just been so discombobulated this week. Because I said I was just, I'm just sticking to one chart for this week for a couple of weeks.
Okay.
And I'm not like all in like I normally be. I'm just like trying to take a chill lay back because of the summertime.
Yeah.
But I feel like I'm off my rocker because when I'm looking at this, I was thinking that, it was time for that sale, and I guess I just forgot and didn't pay no attention.
Yeah, that keeping that longer term bias, right, is definitely one that's important. And like I said, right, we could at some point get we could get things to turn over, right? ECB is still hawkish right now, but we do have this crown pattern that formed here, but we could see another push to the upside though, right? So that's why I'm watching these higher levels, 180, 182, to see what transpires there. And off that fib, it'd be a 618 retracement as well. So it's just being patient with it, right? And seeing.
And I'm sorry,
how things
please
is.
remind me, what is your blue and black colors? Because I already had colors set before I had joined, so I just kept my colors.
Monthly is black, weekly is blue.
Okay, bet.
Yep, and then the red is a daily.
Okay. Okay, bet.
Yep. Right, so we got some higher levels that come into play here that we could get to. So I feel you on looking for things to turn over, but especially with this pair here, New Zealand closely tied to the Aussie, right? Some of the trade partners, a whole nine. And the ECB is still hawkish, and that's what shows here, right? So we could see this continue to rise a bit. Now, if we continue to see things like this coming out of the Eurozone, right, and we see things start to shift, then the question is, do we then start to hear a change in tone from Christine Lagarde, right? But we got to allow those things to develop, because right now they're super hawkish, and they plan to be super hawkish unless something drastic changes. All right. So I have to just be patient on it. But I feel you on looking for that reversal, but it hasn't given us any signs of that reversal just yet. Right. Looking at this move here, it's just been right off that 618 retracement there. It's been waves to the upside. Right. So that's why I haven't, because you guys know I've been watching this crown pattern for a bit, but that's why I haven't taken action on it, because nothing has changed in Europe, right? Nothing has changed in Europe, so it hasn't given me that full return yet, right? So I did play this 80-20 here, right? This move to the downside here. But when we got to this daily support, I took my profit, right? And then we got this reversal and we're running back to the upside. So now that puts in a position where we get back to this high, likely going to get to this D extension as well. And so now we just sit and be patient, say, okay, we got other levels here that we can also watch to see if price stalls at those, right? And then not only does price stall there, but do we also then get a fundamental catalyst that would change the narrative?
So my question is with this one. So when looking for like the double tops and the double bottom, it's best to wait for that candle to close and see what that next candle to do. And I think that's where I slipped up, because I thought I had a double top. And yeah. Because right there, I thought, that would kind of consider as a double top. But then, now I'm looking at it, kind of look like a little head, like a little messed up head and shoulders. But that's what I was taking that as. And I did not put my stop in place on this one. And when I came back, I was like, dang, it didn't. Yeah, it didn't go. Yeah.
Yeah. So a couple of things with that, right? One is taking that step back and adding the fundamental piece into your technicals, right? Do we have a strong New Zealand dollar? Do we have a strong euro dollar? Right?
Oh,
that's one. Then two, laying it out technically and saying, okay, daily, we got a double bottom at 382. Right? That's for certain. We're over here. Certain we got a double bottom at this daily support. Right?
Mm-hmm.
Then adding in strong euro, right? They've doubled down on their hawkish stance. So that tells me that we're still long. Now, the other thing is, did price come and test that level? It stayed below, yes, but you also didn't get a super strong bearish reaction. Kind of choppy, some wicks, right? Not a strong bearish move that broke levels, right? Whereas, like, if you look at this double bottom here, you had your consolidation here, but then you had a strong breakout, right? Here, you didn't get that. Small, tight candles. You had this 4-hour support here that price held at, right? So you didn't get a strong breakout action to the downside to confirm that double top.
Okay.
Right. So those are little things that I look for, strong momentum pushes in a direction. We're looking for those double tops and double bottoms. Right.
Okay.
See here, boom, strong push. Right. You didn't get a strong push here. You had 3 candles, then a pullback, but then you had price take off out of that consolidation.
And so that engulfed and confirmed that double bottom.
Yeah. Because if you look at it, if you come back to the daily, right? That's that candle there.
Okay. And see, that's the other thing. Well, and that's the other thing with this candle. I mean, with that engulfing candle, that pullback, I didn't think, I forgot to measure whether or not if it took majority, went back to the 32 of that candle. So I thought, okay, so that would be on the 4-hour. That's right.
Yeah, on the 4
Never
hour.
mind.
This was that retracement right here.
Okay, I'm seeing it. Okay. So I was just too high in the time frame.
Yeah.
Okay.
Yeah.
I'm trying. Okay.
Hey, listen, you there. So the beautiful thing about it, Joy, right? Your journey's been amazing to watch and be a part of. These are small tweaks, right? As we talk about that 1%, right?
Yeah.
You've been able to compound a lot of those 1%. Now we're at a space where this is a small detailed piece that once you start to see it and combine that fundamental piece with the technical piece, right? Benny's been talking about that global economic view, right? Once you really combine those and hold those tight, it's going to be a game changer for you, right? So you're there, right? This is just another level, right? That you're moving to. That's it.
Okay.
That's it.
Well, maybe
I'm
just. I appreciate it. I appreciate everybody's support. I don't know. Psychologically, I felt beat up.
And I understand. But remember, right? Remember. That's going to happen as you move to a new level of awareness, right? And a new level of growth. That's that struggle that we feel as we're taking these steps in that 1%. Right? So as you feel that strain, don't beat yourself up, but remind yourself, I'm growing. This that process that Ryan keep talking about. Right? And use it as encouragement.
I will. I'm about to put it on my postie. Put it on my computer.
Hey, listen. You got it. And these are things that, when I still do it from time to time, right? I do. I have time where I'm looking at these. All right, yep. I'm gonna take that, right? But then when I zoom out, when I have a conversation with Benny, he says, "Did you see this?" No, I didn't. I overlooked that because I was so zoned in and focused on one piece and not looking at the larger picture, right? That global economic view, that broader view. And so you got it, man. You got it. You are right there.
All right. Yeah, because I think I done exhausted myself. Because by me working at home, even if I don't trade, I just sit and I have a chart and I'll just look at it. And just watch it. And I told myself, I said, maybe my eyes is tired from looking at the chart. And that's the reason I was taking the late. You try to do this laid back, or it's summertime. It's summertime. The kind of volume's low, and stop trying to make something that I started making stuff that wasn't there. And I said, let me just take a break for a minute. But then I wanted to make sure I was still healthy and still in the charts and not far as FOMO, but not being attentive, because I've been in the positions where I call myself taking a break and had to start from square one. So I learned my lesson on that. At least look at the news or look at a chart or look at something just to stay healthy in it. So I didn't want to fall, I didn't want to get too comfortable. So.
Oh, for sure. No, I dig that. One of the things that I do when I get into those spaces, I do take a step back and go do something, right? Go do something. But then when I come back, I'll clear the charts out completely and just remark them from scratch.
I just did that. I did that Saturday. I did every single one of them. I did. Okay. I'm okay. Yeah. I feel you. I'm gonna leave alone.
That then refreshes your view, right? You taking a step away, going to do something, hang out with your husband, kick it with the kids, whatever, right? Even if for a few days, clear your mind, clear everything out on the chart. Now we're looking at it with a clear view, and now we can put the pieces together potentially a little bit differently. And then having this conversation too, right? It's all part of that process.
For sure.
You got it, man. Carolyn said, I struggle with thinking that I know enough, but know that I don't know it all. So look, Carolyn, here's the deal. We're never going to know it all. Except that now. We will never know it all. And that's why it's not about knowing it all, but it's about growing and evolving and learning a little bit more each day. Right? Accept the fact now that you will never know it all. Accept it now. Once we come to grips with the fact that perfection does not exist, having everything, knowing everything, doing everything does not exist, that for me, that gives a little bit of ease to say, okay, let me be present in the moment. Let me just take this one step.
Hello?
Right? Because that other stuff doesn't exist. We will never know everything. We'll never know everything. Right? So accept that. And then look at, okay, what can I learn today? That's it. You can't control tomorrow. You can't control the day after that. You can't control what happened in the past. You can accept what happened in the past and look at where we stand right now in this moment and figure out what's one step that we can take to move us toward the desire that we have. We just need to move in the direction. And as long as we're moving in the direction, right, learning from mistakes, making mistakes, right, celebrating successes, we're moving in that direction. So you got this, but remember that. We'll never know it all, and be okay with that. Fundamental analysis changes everything. I think it overrides technicals, at least that's my experience. Fundamentals, they drive everything, right? You hear me say all the time, there's no technical level that will stand in the way of a fundamental occurrence, right? That won't happen. However, when you zoom out and you look at things from a larger perspective, you see how these key levels, daily, weekly, monthly, ultimately align with your fundamental bias, right? You also see how these fib levels align with some of these key economic reports, right? So no technical level will ever stand in the way of a fundamental occurrence, but you'll see a lot of those fundamental occurrences come in line with weekly, monthly, and daily levels, right? And that's the beauty of the Fibonacci sequence. That's the beauty of the Fibonacci sequence, right? We saw this transition happen. We saw it building. We saw the ECB become really hawkish, right? And even at the end of last year, we saw the ECB become hawkish, right? This whole move to the upside, we watched happen. We saw it from a fundamental perspective, right? Watch this. We saw it from a fundamental perspective. We saw it from a technical perspective. Boom. Push down. We saw these things happen, right? And so combining those two puts you in a really, really good position to see things from a different perspective, to understand the thought process behind how the market moves. And that's why we teach this methodology the way that we do. That's why we teach it the way that we do, even including the mindset piece of it, right? Technicals, fundamentals, technicals, understanding how to see it and how to combine the two. That's why we teach it the way that we do, man. That's how we were taught, and that's why we teach it the way that we do. Church reflect your hope, not your fears. Hope brings us one step closer to joy. I love that, Ron, Donette. I love that. All right, good people. Hope that was helpful, man. You guys are awesome. Look, listen. It's about 1%, man. Become 1% better every day. You'll see change. Don't focus on the end result. Know where you're going, but know that there's a process to get there. And focus on understanding the process and falling in love with the process to get there. That's the key. That's the key. It's taking one step at a time. One step at a time. 1% at a time. You guys got this, man. That's it. That's our Wednesday. We'll see. We won't be here tonight. Tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. I'll be back with you. You guys have a phenomenal Wednesday. We'll see you in the morning. Peace. Chat in the Discord, right? Let us, if you see something happening, drop it into the Discord. Let's have some conversation there. All right. Have a good one, everybody. Peace.
Thank you.